Hey guys, what's up? This is Tony from Alphapursuits.com. So this week was a pretty exciting week. It was going up and down quite a bit because of some economic data such as CPI, retail sales, and of course JP Morgan reported their earnings fell 28%. So let's take a look at what the VIX indicators and SPX technical analysis is telling us what will likely to happen next week. Stay tuned. This information is for informational purposes only. Please do your own due diligence before placing any trades. Now, before we get into the details, I have been getting quite a bit of feedback regarding technical analysis. And one thing to clarify is that technical analysis is not being used to tell the future. Obviously, nobody knows what's going to happen in the future. The key point, the key takeaway from the technical analysis is it gives us point of actions. So when something doesn't happen, you probably want to react accordingly. So essentially what we are doing here is based on the chart, based on the line that we are drawing, based on the moving average, whatnot, if certain things doesn't happen according to what we think it should happen, then we should act accordingly and have plan A and plan B. That's all it does. It does not necessarily tell us here is one true future that's going to happen. So I just want to make that clear in case for people who are not familiar with technical analysis or people who are thinking technical analysis is being used to tell the future and it's completely pointless because obviously it doesn't. So just want to get that out of the way. Now with that being said, let's start with the VIX indicators. So VIX indicators is showing us that the market seems to have calmed down quite a bit as far as from hedging perspective. And obviously when people think the market is going down, there's going to be more hedging happening when there isn't. And interesting enough, despite the fact that this week the market was quite volatile, obviously it dropped down substantially and it just recovered substantially as well. And yet VIX indicators, various VIX indicators here. So VIX 90 is looking at the 9 days forward volatility, VIX 3 and 3 months, 6 months, and of course VIX is forward-looking 30 days volatility. VVIX is the volatility of volatilities looking at VIX. And here's the ratio calculation. And this is really just looking at the percentage rank of each of these values itself, comparing to 1 year worth of prior data, historical data. So as we can see here, the number has been dropping quite a bit despite the fact that it was such a volatile week. Wednesday CPI came out, JP Morgan said they missed the earning, and then Friday sales data and also some other economic data that came out and brought the market back significantly. In fact, it brought us back within this short-term uptrend line, which was quite amazing considering how much it dropped, and then it came back up here. Now, it is right below the 25 days moving average, which is kind of interesting. And again, for people who think technical analysis is pointless, looking at this 25 days moving average, it has been hitting it, fake breakout, and then just came back down. And that shows how strong really this downtrend is going on. And also, up here, you can see that this is the 50 days moving average. It never really went across it. It sort of stayed below that at this level here as well. So this is why technical analysis is useful, because a lot of people are looking at the same thing and acting in a certain way based on what they are saying. And imagine if there are enough people looking at the same thing and acting the same way, obviously the outcome of that is gonna become, exactly that. And obviously now everybody's looking at, this is a daily chart. So some people are looking at hourly chart, some people are looking at 5 minutes, 1 minute. So different people are looking at different time frame. And obviously there are other external factors. For example, a huge mutual fund might be looking at the same thing and thinking, okay, if it goes down to this point here, I'm just gonna sell. If it goes up this point, I'm just gonna sell. I'm gonna start buying. So with those additional external force, not just traders but long-term investors as well, that when all those forces come together, obviously technical analysis is not 100% because there are other external factors that's happening to change all this. But at the same time, by having this view, we can say, okay, this should happen, assuming everything stays equally when there's no additional data get fed into it, because enough people is looking at this to act based on that. Then we can plan accordingly and say, okay, if it doesn't go across this line, go below this line, then we should do this. If it does, then we should start doing that. And obviously, some people might have start selling, sort of putting more hedging once it hit this point, and then it did go down. And so for those people, they obviously did pretty well. So that's the kind of thing, technical analysis is useful. And again, it's not being used to foresee the future. So let's come back here. Sorry, I got sort of digressed there, but essentially what this is telling us is in the short term, most likely that the market is going to continue its uptrend, but at the same time, it's not quite low enough to, sort of 10%, 20% level. So in the longer term, probably there's still a pretty good chance the market is gonna keep going down. So I wouldn't recommend, obviously, personally, I would not remove quite a bit of the hedge that I have in place at this point. And coming down to the technical analysis, SPX technical analysis. So I sort of already said quite a bit of that here. There's a large gap that I've been talking about for the last few weeks now that hasn't been filled, obviously. So I'm still waiting for that to get filled. Who knows when that's gonna happen? So I'm not very optimistic to see that happening pretty soon. But at the same time, it was really interesting to see the market turn around quite significantly on Friday. And so now it's approaching moving average 25 days. We will see whether this is gonna, the market is going to penetrate that. That's one thing I will be looking next week. And also whether the market will continue climbing this uptrend line. And if it breaks again, then it's fair game. It can be anywhere at that point, because we are still below within this downtrend, major downtrend line. We broke this short-term downtrend line a couple weeks ago, obviously, and so that was pretty bullish there. And now, obviously, from longer-term perspective, we are still way below this. We still have this 50 days moving average to get resolved as well. So even if it goes beyond that, that might be acting as the next resistance there. And it gets sandwiched between these two unless you resolve those two, and then we will not see a uptrend forming. And then once it hit this major downtrend line, again, we need to see whether this gets resolved or not. So there's quite a bit of things happening there. On top of that, we have FOMC coming up as well, the Federal Reserve meeting, and packed with stuff. Very volatile market, so we'll definitely need to keep a close eye on everything. So that's it for this week. Thank you for watching this video. If you like the video, please give it a thumb up. Please subscribe to the channel so you get a future notification of a new video, and I'll see you in the next one.